Last week was a short holiday week, but the market did not take the week off. We saw powerful upside moves across the board. The question now is simple. Can this rally actually hold? Before we jump in, hit that like button and subscribe so you never miss the levels and setups that matter. Let's get into it. This was a shortened holiday week, so volume across the market was lighter, but that didn't stop the SPY or the QQQ from pushing higher. In fact, both ETFs printed 4 straight green days heading into the weekend. Starting with the SPY, we opened the week strong after more members of the Federal Reserve leaned into the idea of a potential rate cut in December. On top of that, fears around the so-called AI bubble cooled off, and early holiday shopping data came in stronger than expected. Even with poor overall volume, the SPY climbed day after day and is now pushing back toward that major level at 685. If we get there, that would create an equal high to the breakdown we saw in mid-November when AI fears first accelerated. It's also important to note that the SPY is now back above the 5, 20, and 50-day moving averages after bouncing off the 100-day. The 5-day moving average is crossing up through the 20-day, which shows real strength and momentum coming back into this rally off the lows around 652. The major question this week, can we get to 685, break it with strength, and support above it? If the answer is yes, then all-time highs become a realistic conversation again. But I want to be clear, the move last week was very vertical. It would actually be healthy to see a pullback. If we reject 685, the first spot I want to watch is 681.30. That's the level we broke through on Wednesday and held on Friday. Below that, the major zone to watch is 674 to 675. I've had this area on my levels for months. It's been support, it's been resistance, it's a magnet for price. That zone also aligns with where the 20-day and even the 50-day moving averages could come in to support the trend. Technically, even if bears step in, as long as the SPY holds the 673 area, the daily trend remains intact. We need to see a higher low form at some point. And this pullback, when it happens, could be the start of it. If this holds, it could also be the beginning of the Santa Claus rally into year-end. Market internals were extremely strong all week. The VIX, which measures volatility and fear, dropped from 24 down to 16. The advanced decline line held in bullish territory with more stocks rising than falling. VOLD, which shows volume flowing into advancing stocks, absolutely exploded all week, and tick readings stacked positive day after day. It was a very strong internal picture. Now let's move to the QQQ. It's in the same general uptrend as the SPY, but it's not quite as strong. The big difference here is that the QQQ is still a ways away from its breakdown lower high at 625. We did get 4 green days just like the SPY, and we bounced cleanly off the 100-day moving average. We're above the 5, 20, and 50-day, but the 5-day hasn't crossed the 20 yet, which tells me the strength is real, but it's not as mature of a move as what we're seeing in the SPY. This move last week put us over multiple Fibonacci levels, but we don't have a confirmed higher high until we challenge that 625 zone. The big upside level is 625. If we push higher out of the gate and challenge that level, the real question becomes, can we break it and can we retest it for support? If bulls manage that, there is a very clean path to all-time highs next week and beyond. But just like SPY, the QQQ needs a healthy pullback to flush out bears and invite new money buyers. Right now, we're sitting above 617.50, so if we hold there, or even pull back into the 611.50 to 613 zone, that would be a healthy place for a higher low. This zone has been resistance for months, and there's a high volume node there showing strong buyer-seller interest. Below that, we have support at 606, 601.65, and even 596.50. But that 596 area is the true line in the sand. Any move below that would put bulls back on their heels. Now let's shift into the top stocks to watch this week, along with the actual setups I'm looking for. Starting with NVDA. This one is fascinating because NVIDIA has massive weight in both the SPY and the QQQ, yet the market has been rallying while NVIDIA shows weakness. Last week we broke under 171, hit a fresh low, and buyers did step in to push us back over 175. But here's the issue. That 100-day moving average, which acted as support for SPY and QQQ, is acting as resistance for NVIDIA. To the upside, if we can reclaim 178 with volume, we can test 184.75. But that's where a lower high could easily form. To the downside, if we reject 178, I'm looking for a move back to 175, and if that fails, 171 is back on the table. I will only trade NVIDIA if these levels are clean. Next is Google. Google has been extremely strong these past couple of months. It broke a big consolidation range in early November and went straight into new all-time highs. Last week we had a gap up Monday, and while the candles were red for a few days, we're now forming a bull flag right at all-time highs. To the upside, reclaiming 327.50 sets us up for a run to 333 and beyond. If we sit under 317, I'm less interested, because that likely means a new balance range is forming. And to the downside, under 317 opens thin structure and a gap to 304 and eventually 291.65. As always, let the SPY and QQQ guide this name. Now Amazon. Amazon is tricky because we're sitting right at 233.50, which is the 50% retracement level from the previous lower high. If we break above and support, we can target 238.75, but that's also where the 20-day moving average sits, so that could act as resistance. To the downside, under 230 opens 227 and 222.75. If the broad market pulls back, Amazon can absolutely form a new lower high here. But if the market stays strong, Amazon becomes a great longer-term entry candidate. Apple next. Apple was a leader last week, hitting a new all-time high. We pushed up to 277 on Monday and then broke above it on Tuesday. That inverted hammer on Tuesday was concerning, but Wednesday and Friday held that level and built a new resistance at 279.10. If we break that level with strength, Apple could keep running into new highs. But I also like the idea of Apple forming a balance range between 277 and 279. If we break under 277, I'm not interested in trading the chop, but long-term, Apple stays bullish as long as we hold 270-260. Now AMD. AMD looks similar to NVDA, still weak relative to the broader market. We're sitting at 216 and rejecting the 50-day moving average, but there's a potential double bottom forming here. If we open and hold 216, even with a quick look below and fail, we can target 226.65, and if that breaks, 236. But if we lose 216 cleanly, that's a confirmed rejection of the 50-day and sets up a move down to 203. There's also a gap below, so sub 203 could bring more pain. The hammer candles make me cautious about shorting, but the levels are clear. And finally, coin. Coinbase has been following Bitcoin step for step. This chart is getting hammered. I am watching puts if we push back into that 291.50 area. That level has been tested multiple times, including a recent rejection. You've also got the 200-day and 20-day moving averages overhead, adding more confluence. If Bitcoin forms a lower high and Coinbase rejects off this zone, the downsides are clean. 269 first target and 245 if crypto continues slipping. For this setup, I prefer slightly further dated options like December 12th or 19th. Overall, I am leaning cautiously bullish. The move last week was strong but very vertical. Buyers were clearly present, but the market is still technically in a daily downtrend, and we have not fully neutralized that yet. A higher low on the SPY, the QQQ, or on any of these major stocks could flip that trend, but we need confirmation. The number one thing to watch this week is volume. If we move up on higher volume, that confirms the rally. If we pull back with heavy selling, that reveals whether last week was a trap. Risk management-wise, stay cautious. You don't need massive position sizes to win. You need solid levels and a repeatable strategy. Size smaller, trade clean setups, and stay patient. That's your full breakdown heading into the week. Key levels will decide everything from here. If you found this helpful, hit that like button and subscribe, and check out my daily shorts for the best levels and trending stock setups every morning. Clear levels, real setups, smarter trades. I'll see you in the next one.